Hey everyone, welcome to today's Explainer. If you're the kind of person who loves figuring out the hidden gears that keep our global economy turning, well, you are in the exact right place. Today, we're breaking down an absolutely massive geopolitical shift. We are looking at what actually happens when powerful, foundational oil-producing countries decide to just walk away from their biggest alliance. And look, this isn't just about barrels of crude oil. It is about power, money, and literally the future of energy. We're going to map out exactly how this whole thing shakes out.
Okay, let's just dive right in. Here's our agenda for today. First, the UAE shockwave. Second, understanding OPEC's power. Third, the quota problem. Fourth, 3 scenarios for oil prices. And finally, number 5, the everyday consumer impact. Because ultimately, this right here is the billion-dollar question hanging over the global markets right now. When a major player completely unplugs from the system, do we see a massive surplus that suddenly makes fuel cheaper for all of us? Or does this fracture trigger a dangerous, highly competitive oil price war? The stakes are incredibly high here.
All right, Section 1, the UAE shockwave. A major Gulf producer steps away.
So May 1st, 2026. If you follow energy markets, you probably want to circle this date in red. Recently, the United Arab Emirates announced that this is the exact effective date they are officially leaving OPEC. And keep in mind, the UAE has been a member for decades. According to Reuters, this announcement sent an absolute shockwave through the markets. Why? Because the UAE isn't some fringe player, right? They are for sure one of the biggest and most influential oil producers in the entire Gulf region.
Actually, wait, before we get ahead of ourselves and start imagining a total collapse of the organization, we need to lay down some factual groundwork. Not all Gulf countries are packing their bags. Saudi Arabia, Kuwait, Iraq, and Iran remain key, foundational members of OPEC. So it's crucial to understand that the core of the group is still intact. And honestly, that's exactly what makes the UAE's departure such a fascinating disruption rather than just a complete dissolution of the group.
Let's move to Section 2, understanding OPEC's power. The market mechanics.
The immense power of this group is beautifully simple. OPEC, which stands for the Organization of the Petroleum Exporting Countries, has one primary superpower: market coordination. They act together to influence global oil prices. The mechanics are super straightforward. When the group agrees to cut production and pump less oil, the global supply shrinks and prices generally go up. On the flip side, when they agree to open the taps and produce more, prices tend to fall. They are essentially the global thermostat for oil.
Which brings us to Section 3, the quota problem. Why leave such a powerful group?
Well, the answer really comes down to production limits. To control that global price, OPEC assigns quotas to its members. A country cannot simply pump as much oil as it physically can. It has a hard ceiling. And for a country like the UAE, this became incredibly frustrating. They've invested heavily, we are talking massive amounts of capital, into expanding their oil production capacity. Reuters reported that the UAE had been seeking a higher output quota to match this huge investment. Think about it. When you spend billions to be able to produce more, being told to keep the taps half closed feels incredibly restrictive.
And you know what? This friction over quotas is not an isolated incident. It's actually a growing trend. Back in 2019, Qatar left the group, though Brookings notes their primary reason was to pivot and focus on becoming a global leader in liquefied natural gas. But then look at 2024. Angola walked away specifically over disagreements after OPEC Plus lowered its output target. And now, 2026, the UAE leaves seeking higher output. This timeline clearly shows a consistent recurring theme of internal pressure building against these collective limits.
And believe me, the rest of the members are watching this friction very, very closely. Take Kazakhstan, for example. While Upstream Online reports they formally denied plans to quit OPEC+, their name frequently pops up in discussions about internal tensions. Nigeria is another prime example. They've previously expressed clear frustration over their production quotas because, frankly, they just want the room to increase their output to boost their national revenue. The pressure inside this pressure cooker is palpable.
Okay, moving on to Section 4. 3 scenarios for oil prices. What happens next?
So the crucial point here is that the impact is not simply an automatic oil will crash situation. Analysts looking at this data see 3 specific diverging paths the market could take. One where prices just fall, one where a full-blown price war triggers, and a third where we just enter a period of extreme volatility. Let's break each of these down.
In Scenario 1, prices naturally fall.
is just basic supply and demand, right? If the UAE, completely freed from those OPEC restrictions, starts producing significantly more oil, the global supply increases. As long as global demand doesn't suddenly skyrocket at that exact same speed to absorb it, that extra supply in the market usually means lower prices across the board.
Now, scenario 2 is much more aggressive. The Guardian actually highlighted warnings from analysts that a price war could erupt. Imagine Saudi Arabia and the newly independent UAE suddenly fiercely competing for the exact same market share, particularly in major consuming regions like Asia and Europe. To win over buyers, both countries might rapidly increase production and start offering steep discounts. If they start trying to undercut each other, that could push global prices down incredibly sharply. And then there's scenario 3, extreme volatility. Actually, scratch the idea that extra supply automatically guarantees cheaper oil. Geopolitics always has a say. Reuters specifically points out that wider regional instability or any uncertainty around critical supply routes like the Strait of Hormuz can push prices right back up. So the market basically becomes a tug-of-war between extra supply pulling prices down and geopolitical fear pushing them up, making the whole thing incredibly hard to predict.
And this brilliantly illustrates the ultimate dilemma for any oil-producing nation right now. On one hand, leaving OPEC offers independence and the freedom to maximize your investments and pump whatever you want. But on the other side of the scale, you lose that collective protection. If everyone decides to be independent and starts pumping at maximum capacity all at the exact same time, prices can crash so drastically that even the producers end up losing money. It's a massive, high-stakes gamble.
Let's bring this down to eye level with Section 5, the everyday consumer impact, or what I like to call the outermost ripple.
Let's look at how this builds into your daily life. A barrel of oil directly impacts your wallet in ways that go far beyond just filling up your car with gas. We are talking about the underlying cost of nearly everything. It dictates transport and shipping costs. It affects the price of your Friday night food delivery. It determines how much you're going to pay for airline tickets. Ultimately, oil prices are a foundational driver of general inflation. So, whether a country's government budget thrives or struggles, and whether your groceries cost more next month, it all traces back to these exact geopolitical shifts.
To sum the whole shebang up, if major producers continue to feel they can earn more by acting completely independently, OPEC's historical influence weakens. And a weaker OPEC means we are entering a global energy market that is much more competitive, significantly less controlled, and highly unpredictable. As a consumer, sure, you might celebrate cheaper fuel in the short term, but the trade-off could be facing much bigger, wilder price swings in the future.
Which leaves us with this final thought. Based on everything we've looked at today, do you think leaving OPEC is a brilliant, calculated move for national independence, or is it the reckless spark that will ignite a destructive global oil price war? I would absolutely love to hear your perspective on this, so please share your thoughts. Thank you so much for joining me for this explainer. Stay focused, keep learning, and I'll see you next time as we break down another fascinating global shift.